Guys, good morning. It is 11:15 on Tuesday the 3rd of September 2024. You're very welcome along. This date puts us at 2 years and 22 weeks completed of what will be roughly an 8-year fire journey. And what I've got on screen here, I just want to explain briefly before we look at the usual view of things. So on the left hand side, this sort of top window, we have the kind of the normal portfolio view, where you can see, or you maybe can't, but there's a very faint grey line. I'm sort of trying to trace the grey line with the mouse, which is fairly steady because of the fact that we are increasing our portfolio investment weekly. And then the slightly more jagged blue line, which I think for the whole of everything that you can see on screen is above the grey line at the bottom, that is the actual portfolio value at the different dates. And in fact, as you run the mouse up and down that line, you can see the amounts that are invested and the return varying by date. So in fact, because this is only showing a 1-year timeline at this current point, you can see the amount invested was just under 9,000 at that point, and the return was roughly 7%, and then that fluctuates as we go along. It actually went right down to 1 point something, 1.3% there. That was it at the end of October 23. And then, as you can see, if you follow it from there, it has kind of pretty much steadily increased ever since, as the market kind of recovered, with a couple of fluctuations, but basically on the whole an upward trend, leaving us at the current point today, where we are sitting at a return of roughly 20.75%. Now, just in relation to this window here, let me actually just set that to a 1-day time frame. This is going to be a little bit confusing perhaps. This graph is completely nonsensical, and the reason for that is that is showing a pie that I've literally just created today. So basically what I have done is I have created a pie with a single investment in it. Now that might sound completely pointless, but the reason that I wanted to do it was to be able to set a goal, and to basically let us see our progress towards the goal over time. So as I say, this graph kind of goes from 0 to 18,265 in the space of less than a day, because I've literally just done it. Presumably that graph over time will begin to look more like this one, because basically the investment that's in it is the same. It's the same portfolio. It's just that it's included in a pie wrapper, if you like. Now, as I say, I wanted to set up a goal, so you can see the goal here and the progress towards the goal. So as you can see, it says on the right hand side here, 77,000 is the goal, and we are 23.88% completed. So in other words, we are nearly a quarter of the way there, in fact. Okay. Let me just check that that's right, actually, because I just like to verify things. just for my own satisfaction. Yeah, basically, if we were saying that 18,265 is it's almost 24% of the goal. Let's just multiply that by 4 and see what it comes out at. It'll not be as much as 77, that's for sure, because we're not 25% there yet, but we're not far off. Okay, so that comes out at 73. So yes, that's a fairly good indication that that is calculating properly. If I click on it, you'll see the exact figure for the goal, because it's not actually 77,000. It is 76,513. Now, you might think, where on earth did I ever get a figure like that from? The answer is quite simple. If we go back to the actual website itself and the forecast that I had done for the YouTube example, investing £120 per week in the S&P 500 for about 8 years, and we assume a 10% annual increase on average, then at the end of the first year we have that figure, second year there, third year, fourth year, fifth year, sixth year, seventh year, and finally the end of the 8th year. You end up with a figure of 76,513. So that's where that has its origin, 76,513. I've literally just popped it in there like that, and then that gives us a goal that we can kind of track against, if you like. So with that being said, let's go to the normal view of things, if you like, which is here. And first off, we have, so currently today, as you can see, this is looking at the Vanguard S&P 500 exchange traded fund, traded on the London Stock Exchange, so in pounds. This is the fund that I always use. It's the only fund that I invest in for the purposes of this demonstration. Currently we have 224 shares worth 18,263 and a current return on investment of 20.75%. Average purchase price currently 67.36. That will increase probably by about 10p whenever we add in this week's investment. And as you can see at the bottom here, currently today there has been about a third of a percent pullback in the price, although for the 52-week range shown underneath that, the price is near the high point. Right, so before we have a look at the notifications, we just have time for a quick little ad, and I'll be back right after this.
Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing an informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. thelightpaper.co.uk.
Okay, so let's have a little look at the notifications for today. Rolls-Royce rebounds 3% from Monday's sell-off after identifying Cathay Pacific engine issue. Volkswagen rises 3% as CEO warns of plant closures in Germany to boost competitiveness. Rightmove soars 22% on potential takeover by Murdoch-owned rival REA Group. And then we have upcoming holidays, Monday the 2nd, so yesterday, so we're out of date on this, but let's see if there was anything else. No, there wasn't. So it was only yesterday was Labor Day in the US and Canada. US and Canadian markets were closed for trading. Okay, so that was then. This is today, and things will be back to normal today. Right, let's have a bit of a look at the curve here. So, I mean, if we go back, people that have been watching this channel before will know that this big dip here, that's the COVID effect. It didn't last too long. It started at around about the end of February 2020. And things were back on track again by about August. So that lasted for 5-6 months. And then after that, the market has pretty much increased steadily up until the start of the Ukraine conflict. And also in that, we've got the settlement in the Middle East as well. And then from about, I would say this point, September, the market seems to have readjusted and really started to make up some of the lost time, if you like. There was a little bit of a pullback, a little bit of a correction there. But that was pretty short-lived, and things seem to be back on track again, heading more towards what I would consider fair market value. I still believe that the market is undervalued compared to where it should be, but nevertheless, it is what it is where it is, and as you might say, nobody can say where fair market value is other than the market itself. Right, just before we go ahead with this week's investment, I just would like to draw your attention to another media outlet that I follow, and I think they're well worth a listen. So I'll be right back after this.
With your help, we can continue to fight for freedom, reach new audiences, and bring important information to the public free of charge. This is not possible without your generosity. Join our quest for the truth and our freedom and donate today. Simply go to tntradio.live.
Okay, let's have a look at this week's investment. So we're using Trading 212, the practice platform for Trading 212. The market values are real, but the money that's being invested here is theoretical. That's not because I don't have confidence in the market, it's because I prefer to keep my own investing private. But these figures are based on figures that I had calculated at the time that I believed even people working at Band 2 in the NHS ought to be able to afford to invest with a view to achieving early retirement. Now that said, it does all depend on minimizing your costs as far as possible and living well within your means. But since the time that I began this fire journey, it would be right to say that salaries in the NHS have risen significantly. I wouldn't say substantially, but they have risen significantly. But then, of course, so has the cost of living. So that's not to say that you would necessarily be able to invest much more than this as a Band 2 worker, but you might. And the emphasis I would put on the investing, or rather what I would say is make sure that you don't invest all of your free cash. You need to ensure that you have a financial cushion so that if and when you need to replace, let's say, a car or expensive appliances or something like that, or even if you need maintenance done on your car, you need to have a financial cushion available so that you can dip into that as and when needed, but also so that you can basically you want to be investing an amount which allows you to top up that financial cushion as well, because when you do need to replace your fridge or your washing machine or something, you then need to put that money back relatively quickly as well, just to cover yourself, so that the next time something happens, you still have enough there to cover it. So pick your weekly amount so that it's low enough that you still have time to build and replenish a financial cushion. As I say, I have calculated that figure I felt should be around about £120 per week. Certainly in the example that I have picked, and at today's market value, that's going to buy us roughly just under 1.5 shares. It's going to be a market buy, so I'm not setting any limits, either high or low. And when we put that through, then that has executed. So as you can see, we got 1.47 shares at 81.36.5. And let's see what that has done to our other figures. So everything has updated here. Now the average purchase price is 67.45. So at the start it was 67.36. So that has risen by 9p, I think it is. Current portfolio value just a little bit under 18,400, and the return on investment pretty much unchanged, 20.6%. So that's pretty much it for today, guys. If you like the content, feel free to subscribe to the channel to follow the journey, and if you particularly liked this episode, why not give it a thumbs up. But other than that, guys, that's it for this week. I will be back next week for more, and in the meantime, have a great end to your Tuesday, and thanks for watching.